Welcome to Shadow of Truth, and today is Thursday, May the 19th, 2016, and your hosts are Dave Kranzler from Investment Research Dynamics and Rory Hall from thedailycoin.org. How you doing today, Dave?
I'm doing well, thanks, Rory. How about you?
I'm doing all right, and we haven't done a market update in a couple weeks, and there's a lot to talk about, but I think that we've got it narrowed down to good cop, bad cop, and the Fed and their nonsense coming out with should we raise rates or should we not raise rates? And what is your take on that?
It's just more of the same. I mean, we're probably, about 4 weeks out from the next FOMC meeting. I think that's exactly where we are. And they've been doing this now for about at least a year, where they don't raise rates, and then you get a series of Fed officials that come out and pound the table on why they need to raise rates. And they always leave themselves a little back door, though, predicated on the data. And actually, that predicated on the data started showing up, I think, like maybe early this year or late last year, because it became pretty obvious, other than that one 25 basis point nudge, that they're not going to raise rates. I don't see how they can raise rates without completely destroying the housing market and auto sales, because that's the only thing right now that's keeping any kind of economic activity in this country going, other than Defense Department spending.
Yeah, Defense Department spending, I mean, that's off the chain, and, you know, lot of money in death and destruction. So, but other than that, I mean, like you said, I mean, I just interviewed John Rubino a couple of days ago or yesterday, and there is no retail activity, at all. And 70% of our economy is retail based. And if you don't have any retail going on, except for a Ponzi scheme called Amazon, then your economy is not going anywhere. And I want to ask you this, Dave, in regards to that. Is a retail-based economy a sustainable economy? Is that even possible? Because it seems like, from my perspective, I see people that work at Walmart eating at McDonald's, and the people that work at McDonald's shopping at Walmart. And that's just this feedback loop that goes nowhere. And there's not any really sustained growth that can happen from that. Or am I missing something there?
The misnomer is that it's a retail-based economy. I mean, retail activity is about 60% of the GDP, but it's all predicated on the ability of the consumer to get credit and access to credit. And the only way you create growth, because the median disposable income, especially when you adjust it for inflation, has been flat to down since 2007. And so and everyone's expenses are going up, especially with Obamacare. So to the extent that you're squeezing disposable income, the only way consumers can spend is if they use their credit cards or they take out home equity loans, which I know a lot of people who are doing. Or they get personal loans, lending club. That's why the lending club existed, or part of the reason. So no, you can have a retail-based economy, and you can keep the velocity of that activity going. But eventually, if the velocity of that activity is predicated on debt and the growth of debt, eventually it's going to hit a wall, and you're going to collapse, and that's where we're headed.
That's pretty much where we're at, isn't it? I mean, we have over $1 trillion in student loans. We have, I think, close to $1 trillion, if not more than $1 trillion, in auto loans. And that's to say nothing of the housing industry, the mortgages that are out there. I mean, where's it coming from? And like you said, Obamacare, I mean, I'm already reading that Obamacare is going to go up by 18% next year. I mean, that's a significant jump.
I wanted to circle back to what the Fed officials are doing, and it's amazing to me that the stock market algos fall for the same trick every time. I think it's almost like they do it intentionally to create a sell-off in the precious metals and the S&P, because they know the Fed's going to push the S&P higher at some point. It's almost intentional so that people who understand what's going on can sell ahead of it and then reload on the dip and the sell-off. I mean, I think there is an outside chance that they might raise rates, but I think that's what they want you to believe at the end of June. And as a matter of fact, we had in the last couple of days, John Williams and Dudley was out, I think, earlier this morning, and Lockhart was out a couple days ago, and they all said, "Oh, we're raising rates in June. It's on the table. And Williams called it, it's a live meeting in June." And Dudley used that same term. It's a live meeting. And then he said, "But a rate rise is predicated on the data, and the data keeps getting worse." And then later today, this guy Stanley Fischer came out, and he's the co-chairman of the FOMC, for those who don't know, and he's probably one of the most corrupt people in our system. And he said, what we need most now that we are near full employment, and everyone knows we're not even close to full employment, and he knows that, and approaching our target inflation rate. What's their target inflation rate? 2%? Well, guess what? The real inflation rate on everything you spend money on is way higher than 2%. Is faster potential growth. Now he's hedging himself there. Faster potential growth. Oh, okay. So you're going to get faster potential growth by raising rates. I mean, he's basically telling you right there they're not going to raise rates in June.
But what about But wait a minute. Now they said that they were going to raise rates up to 4 different times this year, right? Didn't they say that back in
now
December?
They're saying two rate hikes seems reasonable.
Okay.
They're not
Well,
going to,
one.
Unless there's some reason why they're ready to start crashing the system. They're not going to raise rates. Again, I think the only reason why they come out and do it is it's hot air that for whatever reason the market buys, and it helps support the dollar.
The Fed coming out and saying that they're not that 2 interest rate rises in 2016 should be sufficient. Do you think they're going to be able to do that, or is that going to be, in your eyes, would that be a signal that if they do raise rates, that something is about to seriously change for the negative?
I don't know, Rory. It's data dependent.
Well, there you have it. Oh, because it seems like that if they do raise rates, that they're going to have the same type of an effect that this 1/4 of 1% had, that really kind of shut the door on a lot of things. And it seems like that if they were to do that again, even that small, almost insignificant amount, that it would have the same kind of an effect, right? I mean, it would just kind of jam things up.
Well, everything that requires free money to generate economic activity, including the mortgage market, because the money's free for the banks, and then they lend it out to you at 3.5%. Anything that requires free money becomes more expensive, and it's gonna choke off any sort of semblance of economic activity that's out there. It's going to make it more expensive for consumers who are already levered up to the eyeballs. It's going to make it even more expensive to lever up more and go into the stores and spend money. It's going to make it more expensive to take down a mortgage. I mean, again, unless they have some ulterior motive for raising rates higher, for getting rates higher, I think this is just another bluff.
Okay, so you don't think they're going to raise rates at all ever again, or at least this year?
Hard to say. I mean, I think the last rate hike was it December?
It was December, yes.
Yeah, and I didn't think that they were going to hike rates then. I think it was a reverse psychology move, because everyone was like, "Oh, you're the boy who cries wolf." Okay, well, we'll show you. We can raise rates. Ooh, 1/4 basis point. Great. So I don't know if they're going to do that again to try and maintain their credibility and have sort of a reverse psychology effect on the market again. But I don't know. I mean, I just think that everything is so carefully and methodically managed and tightly controlled that it's just become completely unpredictable. And when the quote unquote black swan does eventually show up and hit the system, that unpredictability is probably going to translate and transform into extreme chaos and volatility in the markets.
Well, I don't really like the sound of that too much.
Which is why you got to use days like today, which I did first thing this morning, and I saw gold was down again. I moved more fiat currency out of my checking account and into my BitGold account.
Well, there you go. That's one way of protecting yourself.
Yep.
Still functions and is outside of the system.
That's right. And I can use it almost like I use a checking account. I got a debit card that works everywhere. In fact, I just got cash out of an ATM machine yesterday using my BitGold debit card.
Really?
Yep.
Wow. Okay. I as far as this rate rise, no rate rise, why wouldn't our creditors look at that and go, are these guys serious? You know, I mean, people like China and Russia, or Russia doesn't have any of our debt, or Japan, or any of these other countries that hold our debt. Why wouldn't they look at this and go, come on, guys, you know, get serious?
Well, forget Japan, throw them out, because the Japanese government is the lapdog for the United States government. They basically do what we want them to do. They're in collusion.
Well, that's right.
And actually, Russia does still have treasury debt, and they've been unloading it. And China has been, unloading as much debt as they can without trying to disrupt the market. And there was an article that was out a couple days ago, and I think I have it bookmarked. I was going to do a blog post that incorporated it and talked about how the rest of the world is selling treasuries at a record rate. So the rest of the world is looking at us and scratching their head. I mean, honestly, I really think that the U.S. is being kind of pushed out of everything that the rest of the non-Western world is doing.
And that makes
it's going to continue.
Yeah, and that makes perfect sense, because as the AIIB, the Asia Infrastructure Investment Bank, Asia Infrastructure Investment Bank, begins to come online and take on more business, and the BRICS Development Bank, or the New Development Bank, as that once again comes online, takes on more business, starts taking business away from the World Bank and the IMF and the BIS, all of these other countries that they're already working with, they're certainly going to start moving their business into those institutions and moving out of the Western institutions. And that is going to, at some point, it seems like we're going to wake up and the United States and Europe, Western Europe, is going to just be completely isolated. I mean, that's what it looks like to me anyway.
Yeah, I think that's where we're headed. Absolutely.
It's kind of sad, but it is what it is.
That's right.
Well, Dave, I think that's probably a good spot to end, unless you've got something else that you want to dive into for a minute.
That's all I got. I just, anyone who's listening to this, I just encourage, anytime you get a big smack in gold, especially when it's predicated on some Fed idiot coming out saying they're going to hike rates in June, buy with both hands. I've bought gold every day this week.
You're having a good week then.
Well, I'm basically flat on my purchases, but at some point gold's going to push through 1,300, and I'll be weighing the money on what I bought this week.
There you have it. Well, we'll pick this up again next Monday. So just a few days from now, we'll cover what happened over the weekend. And if you're new to this channel, please consider subscribing. We would greatly appreciate it. And Dave, have yourself a good weekend, and I guess I'll talk to you on Monday.
Sounds good, Rory. You have a good weekend too.
All right, buddy. Bye-bye.